I wouldn't disagree with that projection. Ultimately, look, our forecast is 7.5 by end of next year. But if we see the full weight of tariffs, our analysis,
full weight is 60%?
60% tariffs plus retaliation, we could, our projections have seen dollar CNY over 8, 8.42 is what we, it's not our forecast, but it's a potential projection if we see the full weight of tariffs on China. Now, there is obviously a little bit of difference in terms of what we're going to see. Our base case is potentially about 30%, and that 10% announcement from Trump just recently, last week, could be a down payment towards that 30%. Now, so we still stick by 750 as our forecast next year, but clearly the way for China to mitigate that would be for FX devaluation or depreciation. And if you remember, we saw this in 2018, very sharp depreciation of the currency.
The currency went past 7, I remember at that time.
Yeah, I mean, overall, there was around a 13% depreciation of the CNY. So, we wouldn't be surprised to see, over our projection of 840 would be almost a 20% move, but still, the pressure would be fairly significant. I know last time China managed to mitigate some of that via trade diversion into the rest of Asia, Cambodia, Vietnam, Indonesia, but and also eating into profit margins of corporates. That was another way to do that. But it's going to be much harder to do that. These margins already compressed quite significantly. We've already seen a lot of trade diversion already happening. So it's not going to be as easy for China to mitigate the impact of tariffs without devaluing or depreciating its currency.